Is it okay to come out? Is this the nowhere to hide market? Except for oil. Are we losing our leadership that we had before? Value, staples, healthcare? Is software going to bring us back? We got a lot to cover today, folks. We're starting out on a down note. The good news is that we're still holding the lows from Wednesday and Thursday. 8:15, we are going to bring on the one and only Kenny Glick. And you're not going to want to hear what Kenny has to say, but he'll do it in an elegant way, and he'll make his point with levels and, the VWAP. Folks, we got jobs number at 8:30, retail sales at 8:30. We got a jam-packed day here, so buckle your seatbelt for pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, good morning, traders and investors. Well, we had a little rally overnight. That's given away. We're down 42 handles, 67.93.75. But we are holding above the lows from Wednesday and Thursday. The buck over 99 cents here. Matching highs just up fractionally, 99.32. TLT, that can't really catch a major bid. That's down 33 cents at 88.60. USO, we don't want to look at USO here. USO is up almost 7%. See, that's a place to hide. That's up $6.50 at 103.03. Gold and silver, they're going in a little bit opposite directions here. GLD is showing some grain, up barely 0.15, silver up 0.11. So they're hanging on. Those charts don't look fantastic either. And if you want Bitcoin to be your savior, well, you had a couple days in Bitcoin, but we're giving it back. See if it's a false bounce. Okay, so these charts are brought to you by TradeStation, born to trade, chart, analyze, customize, all in one platform. Trade smarter, move faster, stay in control with the platform built for serious traders and traders that want to be serious traders. All right, coming to the stage to join me this morning is Money Mitch. Money Mitch. Good
What's
morning.
going on, traders? How we doing in this tough market? And yes, Joel, you might need to go under your desk again today. So just kind of preferencing that ahead of time, because it's been a tough market. It's been a tough environment. And anywhere you look, you're starting to see even a turn, right? And the stocks that are holding up don't seem to be the sexy ones. Let's talk all about that,
So
Joel.
we start out with some good. Well, I guess it's not good. I mean, this USO up $7. Your main stocks that are up here are your oil stocks. Straits of Hormuz, like almost closed. Shipping, international trade is in turmoil. Okay, I don't know how that can be construed as bullish. I don't know. We don't know where this war is going. Right. But here you have it. We could do the pre-market chart here in USO. You can see where we're at, blasting off here, 104, maybe get a little bit longer term perspective. Mitch, when you're in trades like this, and they have these kind of parabolic moves, what do you use? You use Fibonacci extensions? What do you use for targets, or you just move the stop up and let it go?
For USO, what you want to be looking for now is you can use short-term moving averages as your momentum indicator, right? You only want to be using moving averages, especially the EMAs, if you're seeing a momentum run, right? But that's what you see here. And the momentum run that I usually use is I use a 9 EMA because it also acts as the trigger line for the MACD. So essentially, if I'm seeing it above the 9, the MACD should also be looking good, right? But this has been a big breakout in USO. We're talking about, not like a month's trend, right? We're breaking a 4-year trend. And usually when we break those long-term trend lines, right, Joel, that's when we can see a little bit bigger of a run because there was a huge base here that had built up.
Yeah. What do they say? Bigger the bigger
The
the
bigger
base,
the base,
or the space.
the
Okay.
more
So
the
we were talking
space,
about
baby.
value, right? In
Yeah.
how the value was holding us up, right? The value market, your drugs, your XLP, we're losing them. XLP, the staples. Well, that's a monthly there. Bad day yesterday. Pull them back here, Mitch.
Mhm.
Let's do a little technical. I mean, what a move in a usually slowly moving ETF here. It hit $90 yesterday, flat, flat today.
Yeah,
We're losing leadership XLP. What are you looking at?
down over 5% here for the week, right? And in a straight down action. And the question really coming in the week was, would we see another lift in the staples? Will the value trade continue to hold the rotation, right? What did we see? The opposite there, right? If you looked at it in the last 3 days, defensives have actually led the downside sectors, right? It's been the sector that's been hit the hardest the last 3 days. And one of the things that you can look at there is you can see the names that we're holding up, the household personal products like Procter Gamble, names like that, Colgate Palmolive, your soft drink names, your Coca-Cola, your Pepsi,
Oh,
the names that Dennis was talking to us about that were in this kind of value bubble and continuing to lift. Well, they're taking the beating and they're taking rotation away, right? Food distribution names also taking a hit, right? Everywhere you look here, packaged foods, farm product, even the discount stores, right? This week we had really good results from Target, but that couldn't hold up names like Walmart, and we'll go into Costco
yeah,
further
we
later
could do
today.
the okay. I mean, adding to the bad breath in this market here, the drugs. I mean, they came in with their selling shoes right off the open
I
yesterday.
got hit on this one, Joel. I
You
was
see it,
actually
Ed?
long XLV in the pre-market yesterday, looking for this to kind of get the lift. I also had Eli Lilly, and I just got hit hard, man. And this is with using supports, using weekly levels, not even just daily levels, right? Trying to combine time frames, and even then, they can't hold, right? Lilly came out with news that it was trying to support themselves with employers. It just seems like the XLV can't hold here. And if the XLV can't hold, where does the rotation go? Right. And then if you look at the other safety area, probably your XLC, right, then you're looking into the real dividend search, the real
Oh
safety
yeah,
search, right? Then you're looking
right.
at your AT&T, your Verizon, your T-Mobile. That trade's actually been holding up here, but we all know how those trades go. They hold up, and then they fall down really fast, right? So now the question comes into play: where is the holdup here? What's going to the upside? Of course, the chat trying to hint towards energy, but is that going to be the only place that we can hide? Because even that came down this week, right? So it's a tough area, tough trading out there, and a lot of choppy trading environment.
Yeah, XLE. I mean, I was a little surprised that these oil stocks really didn't respond yesterday, but they are responding to the major move here in the USO. That's holding up, but also where are people hiding? Hiding in the industrials, right? Because you got to
Mhm.
build these data centers, right? The picks and the shovels of the market, and
Yeah,
bad day yesterday. A lot of these charts look the same. I
yeah.
mean, you see just big moves on the upside, and then you start to pull back. I mean, you want to, if you're a trend follower, well, you're having an opportunity to buy some of these on the cheap. But I mean, you think it's cheap, but look at where these things were trading in December. I mean, these are absolutely huge moves. As we said, the XLC is holding up. Utilities, another place where everyone was hiding out in
Yep.
the utilities, right? And now utilities, they're still gonna need energy, right? To power all those data centers. That looks okay. I mean, it had the break from earlier in the week. looks like
Yeah.
it got back about half of those moves. So
Yeah, what's hurting here, the XLU, is a turn like in a name like GEV, a name that we've been focusing, right? You just mentioned it, the data center power. What is that? Well, you keep hearing Trump mention, he's telling the tech companies, bring your own power. These are your independent power producers, your GEV, right? Your CEG, VST, NRG. Those are your names, right? And they're all in the same space. They're bring your own power names, right? And these have to kind of hold up the data trade because this is more your infrastructure, right, for that data center play. If we really start to see these fall in the long run, that could show us that there's starting to be some change in what they see the data center spend, right? We're all really CapEx focused here and wondering, can this CapEx spend continue or will we start to see some pullback on CapEx spending? And just to make some mentions in the chat, I did see Dennis talk about how he also states that energy is in a bubble now. So really, I mean, where are the pockets that you can be looking for? Well, it's a tough market right now because I do like the XLU in the long run. I expect electricity prices to go higher. So I've been looking at names like Nextera Energy, right? Staying in the space there, regulated electricity. This is kind of the only area that I'm looking for discounts to buy, right? That's another thing that we need to be thinking
that's
about
got a nice
here.
pullback.
Some
Yep.
discounted buys, right? So I'll be keeping an eye open for utility names, but at the same time, it's going to be a tough market here. And I think another thing that's playing in here is we don't know where rates are going. And that really leaves bigger question to be
Well, the
played.
Fed might have to loosen up their purse strings here if we get continue. We get the we forgot about the jobs number here coming up at 8:30.
Yep.
Just also talking about nowhere to hide. Your gold and your silver, your GLD and your SLV. I mean those charts. I mean, you want them to recover. I mean, you'd think with what's been going on here, these things would be, with the unrest. SLV is a little bit different, but that got wonky there when it got over $100. That's been a little bit harder to recover. After making that low, you made a much lower high. GLD is a little bit more perky, right? It did get back over half of that move. But you're talking about places to hide. I mean, is this a place you really want to be in after these runs? And now you've created a bit of oversupply here. And I'll let you comment on those. I just want to throw in the other safe haven or not. Bitcoin did get off the mat. We've been looking for the 60K to hold, got up near 75K, pulling back. That chart's looking a little bit a little bit more constructive here. But before we bring in our esteemed guest here, Mitch, any comment on gold, silver, or Bitcoin?
I'll just point to the XLB overall, right? Look at the materials, how they even turned. And what is that? That's dollar strength, right? As that starts to weigh further on these commodities. And that's, I think, what you're seeing. And that's what happened recently, right? That's what really kind of broke the strength in gold and silver. And now is starting to affect all the different areas and materials. We're starting to see even the metals and minerals trade, the rare earth trade start to turn back to the downside. And those were names that a lot of traders were looking to buy the dip in, and now they're getting stuffed, right? So we got to continue to watch out there to see what happens here. And the question remains, where do you go hiding? Dennis continues to talk about kind of the TLT trade, and I don't blame him for that, right? Because at the end of the day, we need to watch where bonds go to see what happens here. Right. I think we all know that the equity markets are on kind of the fence here, and we need to see what happens with that trade moving forward.
All right. 8:15. And what you've all been waiting for.
Cheers.
Kenny Glick, hitthebid.com, the Warlock, whatever you want to call him.
Yes.
Call him on top of the markets, Kenny. We had
Yes.
our little conversation yesterday.
Call me the sweatshirt kid. I know this one guy really loves when I wear hooded sweatshirts on the show.
Hit that bid.
Yes, we've been hitting the bid. You know, the funny thing is about, by the way, thanks for having me on this morning.
Yeah.
The fun thing is, you know, again, I love shorting stocks. I love when the market's volatile because that's when I make better money. The bull market where we grind up every day kind of annoys me. Plus, then everybody's a hero. Tom Lee, can you say the same thing every time, Tom? Congratulations. Is the market going to go higher? Wow, amazing. Oh, Kathy Wood, is the market going to go higher? Wow, it's just great insight. It's amazing. Show us what you can do when the market's a little volatile, right? But even though you're able to short some stocks today, these last like 6 weeks or, you know, a couple of months now, you still can't stay short. This market has a spiritual underlying bid to it that if you think you're going to stay short for any extended period of time, you're not just going to lose. You're going to give back all the money you made on whatever short you did get. So it's still a very difficult market to be a shorter, but I do think we're going lower.
Yeah, I mean, some of these intraday, like you have these sell-offs, right? And you're thinking, okay, today's the day. This is the day where they just keep pounding it into the close on the lows, lower after hours. But then you know what? All of a sudden there's like a 60, 70 point rally in the S&Ps. And you're thinking, oh my God, the world is going to survive.
Yes.
And then the overnight action, I mean, we were up 20, 25 handles, and then now we're down 40. So talk to us about your thesis here on the markets. Do we even need to mention the catalyst, Kenny? I mean,
well, I'll show you my screen. I'll show you exactly what I think.
Okay.
But the catalyst, that's the fun part. I do believe the market's pre-programmed and rigged. So all of what we're seeing right now has already been programmed. This market, I can't prove it, right? But the market, you got my charts now. I think the market was going to go down anyway. I don't trade the spies. I'm more of a QQQ guy, right? So here's your yearly chart. We topped out there and then we double topped, right? So that right there was bearish. Max 7, the whole thing, everybody knows about the QQQ. But the resiliency is incredible. So every time we've pulled back, we've made a lower low, to your point. Each time it looks like this is it, we're going to give way. We don't. But these levels now are showing us where that giveaway is going to be. So I look at VWAP only on my charts. So what we're looking at here right now, I'll show you a couple of different levels, which are interesting. Here's a 6-month VWAP. That's what we've been battling these last couple of weeks. And here's right underneath is your 9-month VWAP. So right there, that's what's been holding us together. That's the last time for some reason we cared about tariffs. Obviously, the old tariff tantrum is down here. And this 9-month VWAP has been the trailing support. I think it's going to give way. And I think it's going to give way possibly around that March 20th area, that Friday or that Monday, because it's just setting up. People are going to want to start taking profits. They're going to want to start paying their taxes. And I think that quad witch is going to be that day where we do finally pull the rug and it doesn't come back at the end of the day. And then we just go back. And I'm not looking for some monster crash. Just give me the yearly VWAP right there. Smack dab in the middle of the last time we actually had some selling. That was when this is where Apple had that reversal in August of last year. Right smack dab in the middle. I'm looking at 565, kids. It's not a big deal. It's less than 10%. Just give it to me already, and let's get some scariness out there, and then we'll see if this market really has a bid to it. Because right now, it seems like they want this market to go down. They're throwing everything at it. It's going to be something that we don't expect, or it's just going to happen organically. Because if it's happening on news, those are the ones that don't stick. If we have a reason why we're selling off, and that reason starts to go away, then suddenly nobody cares. The market bounces. I think if it just gives way and there is no news, that's going to be the scary sell-off. And once we break down under that 580, I don't think that other 15 points is going to be too hard to get to. But then if that doesn't hold, then we're looking at 2 years worth of VWAP, and that gets you right back to that last support level, which still, my friends, is not that big of a deal. If we pulled back to 530 on the QQQ, Remember, we were under 400 in April, and this is a monstrous move. And the thing is, we've been so conditioned that every consolidation leads to a breakout. I'm just thinking this next consolidation is going to lead to a breakdown, a little scary moment, and then we're probably going to build from there. It's not like we're going into a bear market. I don't even know if they exist anymore, but give me some.
Yeah, they're very short-lived, right?
Yeah.
If there is any, right?
Right.
So that's one thing that we've seen more and more is that the buy the dip mentality, even in those markets, can't get broken. So we'll see what happens there. You mentioned there, of course, if there's no catalyst break, it might be a more telling sign that we get that further downside break. But is there any pockets of this market that you're feeling like are maybe hanging on by a thread and really ready to start coming down here?
It is the king, the QQQ, those big tech stocks still have a lot more room to go down,
Okay.
And maybe some of the
Google. Is there any specific one that you don't like?
Well, it's basically all of them because they all move together. There's really not going to be. I know you guys were talking safe havens.
No, I'm with you.
Yeah, but sadly, you have to put. You were talking Bitcoin. Bitcoin now controls the tech sector. So, by the way, it's not currency. It's not a safe haven. It's not digital gold. And when that gives way, the whole market's going to crash with it. So if we lose 60,000, which I do believe is going to happen on Bitcoin, you're going down another 10. And then under there, you're going back to 38. And if that happens, you're taking the whole market with us. Because if you guys remember, the last time we had a moment where we were like, oh my God, are we going to come back from this? Was when Bitcoin, if you guys watched the futures on the BTC, I think it was about a month ago now. It seems like it's got to be about, at least 3 weeks ago. You had this overnight session where we were flirting with the 60. Wait, let me find it. And we V-bottomed again. There's the faux show. There's your VWAP break that night. And we had to get bullish. So to Joel's point again, every time it looks like this is it. This is the big one, Elizabeth, or whatever her name was. We just V-bottom and we rally. And if you are short, if you're a shorter with any discipline, you're forced to cover. So it's virtually impossible to stay short. But again, I love the environment we're in. This is the best trading I've seen in over 15 years. You're getting opportunities, so many different vehicles to play. And as much as I'm not a fan of crypto and any of these Bitcoin, one of my favorite trades this year has been the Coinbase just getting washed out as Bitcoin was getting slaughtered. They were destroying this stock too. This is just the index. This is not MicroStrategy. This has been one of my best longs of the year off that earnings report. When it broke under that 140, we just made, right back to that gap fill, basically $214. So to your point again, there's still always there's moments of weakness, but there's so many pockets of strength, and this market just keeps rotating and rotating until you forget that there's any bearishness, and then we go up. So it's such a confounding and frustrating moment for the bears. But I think my brethren who have been suffering, we're going to get our day, and I think it's coming soon. We're going to get that 5 to 7% rip down, and it's going to be glorious. And then, of course, we're going to bounce too. So this is the best trading ever.
You made the old Sanford and Son reference there.
It's the
cover form, Elizabeth.
No one's going to even know our references soon, bro.
Yeah, that one flew over me.
Really? Oh, come on, man. That was that was a great show. Kenny, I know you file your technicals. You try and file your rules. You do a great job doing it. You talk about news here. Have you ever seen a worse news flow?
Yeah.
I was gone for a week. I came back on Wednesday and I looked, and everything that happened over the past week, I'm like, the S&Ps are down 20 handles over this whole course of time.
I know.
And we have what's going on. How do you just try and say, this is my VWAP, these are my levels, this is what I'm sticking with. I don't really care about the world falling apart geopolitically, wars going on, bombs going off. You know what's going on? Straits of Hormuz closed.
Right, you're right there. Wait, chill. None of it matters. None of it matters.
This market needs you to play that at the open.
The market never goes down. None of it matters.
Hold on for life.
Listen, First of all, I only get my news off of Twitter, of course. You know, that's
Oh,
where
of
all
course.
the most trusted news sources come from.
X-Finance.
Yeah. I don't even watch TV during the day. It's all VWAP all the time. And I just trade what I see. And I'm liquid. You know, again, my biggest position right now is just silver. You know, I've been stacking silver since the early 90s. So and that's kind of why I don't know if we had this if we haven't had this conversation, that's why I'm hating on the crypto community right now. Because I'm a silver guy, and I've been suffering for 35 years with my wife, of course, as she's buying handbags and shoes, and I'm stacking silver, and she's yelling at me. I'm like, eventually this is going to be worth more than all your bags, honey. And she's like, yeah, sure. Okay, right. And then finally I have my moment.
Yes.
We're 30-year breakout, and then the entire internet turns on me. I'm like, can I get a moment? Can I get some glory here? 80 got us 120 in 6 weeks. I've been waiting 30 years for this moment. Every Bitcoiner, every crypto guy is hating on the gold and silver people. So now for solidarity, I dumped all my crypto, and I am an absolute hater now. And I'm
Talk about the SLV. Talk about this. Talk about why you're holding. I know before when you're on, you said you're not selling here. Pretty significant. So that just got wonky out there. I mean, you taking a little bit of profits, Kenny, or you just stashing those puppies under your bed?
Well, I'll tell you what I've been doing, Joel. I've been shorting AGQ because this thing, as it went parabolic from 50 to 430, they were printing $650 calls for $65 that night. And I was like, you know what? I got to start putting on a hedge. You know, so I started selling these out of the money naked calls, not for everybody, but at 65 a contract, 250 points away. I'm feeling all right about it. And now they're down to $7. So all I've been doing to hedge my hoard, I guess, if you will, is shorting the AGQ and playing the SLV and the ZSL. So I rarely have been buying paper silver. It's been a hedge this whole time. So loving that move up. You know, obviously I got coins and all collectibles and all this stuff, and I could finally win an argument with my wife. But I've been hedging, and this has been a great tool, my friends. If you don't know, AGQ has the most absurdly priced options I've ever seen. And I don't think we're going back to 400 anytime soon. You could still sell $650 calls going out to, say, September for $25. January, they're still trading at 40 or 50. So I've been just selling premium there as a hedge to my hoard. And it's been a great trade, really great trade.
Real quick, Kenny, we got the jobs number, so we're going to let you go in a second. Any final tips here for our trading, investing audience?
Yes, this is the number one tip I could give you. It's UVXY. A lot of people don't really appreciate the power of this. This is a product that basically tells you the intraday fear. And at the end of the day, usually it goes down. This product is literally built to go down. So when it's trending up, and again, this is just a 3-year chart. If you look at it on a 10-year chart, it's hilarious.
Yes.
But when UVXY trends, and lately it's been trending up, that's the danger zone. If UVXY is above 50 today, you're going to have what we call a no bid close, which we don't really see too much, where everybody's screaming for the exits, everybody's in fear, and there is no bid at the end of the day. And I don't want to say anything.
We don't want to get you in trouble there.
You're gonna be nervous over the weekend. So if UVXY does its normal thing and just collapses today right back down to that 45 level, then once again the market's not going to go down. But if you see UVXY above 50 today, be afraid. Well, again, be afraid for your portfolio. I'm liquid, so be afraid and short something. You better be shorting something. So UVXY above 50, which would be near-term highs.
We got it.
And
okay.
If you're above 60, forget about it, my friends. We're in trouble.
All right. We love you, Kenny Glick. Hit the bed. Warlock, we'll be talking to you again soon. Okay. Thanks, Kenny. All right.
I thought he was going to come with the silver grill here, but no silver grill. Getting ready for the jobs number as that's about to hit, guys. To give you guys a little bit of an outlook here, expectations are at 59,000. I also saw 50,000 from CNBC, but that could all depend on who you're getting your data from. Previous being 130,000. Unemployment rate also. Expectations 4.3. The previous at 4.3. What will we see here? Will they use that as an excuse to take the market down? And it looks like first reaction is on the down. What are you seeing in the reaction, Joel?
Yeah, I don't even care what the numbers are. Non-farm payrolls, we just know that we are at Wednesday and Thursday's low. That's all you have to know.
Got
And
it. Here.
we are not bouncing here, folks. This is a very important area in the S&Ps. Will the bulls actually step up here at 67.75? Your two lows from
Ooh.
the last 2 days were 77 even and 73.50. There's a battle going on. The initial spike was under 67.70. More selling pressure here. February, January retail sales are delayed because there probably weren't any. Oh, man.
Unemployment rate coming in here at 4.4 for February, above the 4.3 estimate. Then we take a look at non-farm payrolls. It was down 92,000 jobs lost there versus a 58,000 estimate there. So down 92,000 in that non-farm payroll. The expectations here for the jobs number were to include a kind of a company that had been on strike. So some people were expecting to see maybe some further downside action come off of that. I think that's exactly what's weighing in on the number here. But this is definitely going to start to be a concern here, as we were expecting to see jobs added and we saw jobs subtracted, right? 50K add, we're getting down 19K, right? So definitely not what you expected there to see. So that's going to definitely 92K, right? It's big number. Of course, there can always be revisions here, but unemployment also a little bit of a spike there. I think the AI fears could quickly come back into play here.
Okay, let's also keep our eye on the lie detector test. That will be the TLT. Now, the TLT did get a nice pop off. That TLT saying, hey, Fed, please come and help us out. 4.4 from 4.3, not what we wanted to see. And how long is it going to, I mean, we don't know officially what's going on in Oracle, but like, how much have you heard about job cuts in the market, right? That is not good. So here you go. The S&Ps did penetrate. They stopped out all those people that were leaning on Wednesday and Thursday's low. We are now 20 handles above the pre-market low. That's a good sign. Probably ran some stops there to get to stop people out under those parallels. Trying to work our way back here. About a 90-point range, so 45, that would take us back. For me, it's very important on this bounce psychologically to get back to the 6,800 level. It's just a psychological level, right? We were going 6,800, 7,000, 6,800, 7,000. Is the new, are we going to develop a new range here? Well, 6,900, which we hit just 2 days ago. Now, will that wall be forming at 6,800? That would be halfway back on the day. But Mitch, man, what a day.
I wanted to go.
Only 8:33.
We wanted to go to the earnings with Marvell really quickly, but I think with this jobs number being such a down move, I think we have to bring in the conversation of the Oracle. We were going to kind of expand about this a little bit more, especially for STN. So we'll talk about that in STN, but I think this is something to think about. Of course, there is a report out there right now that Oracle is looking at doing massive layoffs, right? Cutting thousands of jobs while spending heavily on AI data center. Of course, Oracle is racing to build out a cloud infrastructure to support AI clients like OpenAI, xAI, and Meta. But this expansion is super expensive, right? So they're thinking about maybe cutting some jobs to raise 45 billion to 50 billion to fund this infrastructure, right? And the CapEx could be rising another 15 billion above the expected 35 billion. So the company already has roughly burned 10 billion in cash in the first half of their fiscal year. And with mentions like this, and we're seeing jobs coming down, of course, we saw XYZ kind of lead the new move here, right? Of the flattening, right? Will we see that type of reaction from these software names today? Because the IGV had just finally created some structure, right? We just had structure in the IGV. We were just starting to really start to come up. So I'm wondering, is today the day that the software concern actually plays back in?
Oh boy, I'll go to that in 1 second, but minus 92K versus looking at 50K. I mean,
Yeah. And
wow.
that's the kind of shift that we're seeing, right? And it also tells us that the expectations are so far off. So no one knows what's going on right now underneath the hood. Even the economists are going to be like, well, I mean, we didn't expect this, but a complete flip, right? And I think that just goes to show you guys the numbers are all over the place right now. And really everyone's like kind of forward looking. And we need to see what comes down the line, what continues to break. Is there really a rotation here at play, right? Because if it's going to be value down now and no real shift to growth, that's when things start to get bigger concern. That's when you can really start to break the SPY, because that's what was holding up the SPY, which is that real economy trade, the hardware trade, and of course the value trade.
Just to illustrate what the hell we're looking, I don't think I've ever seen in my first row going all the way back. Starting out with some of your financials here. We could talk about Berkshire Hathaway in a little bit, but Goldman Sachs down 14. Your banks are down. Your mega cap tech is down. Cisco, Nvidia. We did talk about the Nvidia news from yesterday. The green here. You put the oils here. That's not what you want to see. All in the green. ExxonMobil, Chevron. There you go. There's your green. Then you move over to the middle column, your staples. Where we hide it out in staples? No. Coke down, Pepsi down, Walmart down, Costco down. Mondelez is having a good day. That's up a penny. But then you get into the retail sector, and let's get into talking about the retail sales. If you want to look for a little bit of a silver lining here in this market, I thought I saw retail sales were not as down as much. So
it was still negative though. It's still contraction, right? You're at negative 0.2 versus a negative 0.3 estimate. So still showing contraction though of the consumer, right? And if the consumer continues to see what's going on out there, there's really starting to be concern about AI. Energy prices are going higher, right? Oil going higher at the worst time, right? Right leading into the summer months. When you usually see more usage of oil, right? This leads to more of that rut that could come into play into the summer months before the midterms, right? We were already expecting kind of the slowdown because of what happens normally during that time. This is going to weigh in further of an anchor.
Yeah, I mean, putting some pitch on the consumer, right? You're looking at XRT here, which peaked nicely in January. There's another chart not looking good. I don't know. Have you seen Nike? I know Nike. What did they came out with some organizational changes, and look at Nike.
It started to look good for me on the long term even, and then you can't even break the real structure either to the upside either, right? So if all these names, it approached the breakout that day. It went to a long-term trend line, and we're talking long. It went to 68.49 and did a reversal right out of it.
Yeah. So, now coming back down, this area right here is the Tim Apple buy. You know, that was the catalyst. And then this spike here was when was that something regarding the tariffs here. So
that was the tariff. I got cut out on that one. I actually went long on Nike, got caught on that one too, because we were thinking that, okay, well, Nike was one of these companies that were really being weighed down by tariffs. They're going to come back off of this. No,
okay,
not necessarily true.
Pop seemed to be short-lived here in the market. 67.65 in a quarter. That stands as your low. I decided when looking at my levels, the only thing that you could really put in there for the S&Ps, and maybe look at that for your individual stocks. You can see the importance of holding this area that we currently are in right now. We're making another attempt to breach it again. But on Monday, we got to 67.1875. That's another 60 handles away from here. That's low for the week. You know the propensity of the market to close on the highs or lows for the week. Well, it was a great run when we kept on closing up near the highs for the week and then continuing on the following Monday. Here, I mean, we're still 60 handles away. Will the bulls, will people say, oh, I missed that major low on Monday? Will they step up and buy the dip? As we see, happen so often. But we haven't got to earnings, right?
Yeah, let's kick
and
it off.
We
Let's
still
go
got to
hardware.
focus on the fundamentals, right? And we got to talk about the earnings of a company. And let's go. We've been negative. Let's go good, Mitch. You got the numbers there for Marvell?
Yeah, let's go to Marvell. Marvell delivered a strong quarter last night, of course, reinforcing how central the AI infrastructure build out has been. The company reported revenues at $2.2 billion, up 22% up the year. Adjusted earnings per share at 80 cents, beating the expectation at 79 cents. While revenue came in above the forecast at 2.21, the bigger story was the business mix and the outlook. Data center revenue rose 21% to 1.65 billion and represented about 74% of total sales. So, of course, this underscores how much Marvell is now tied to cloud and AI spending. Management also did give the guide in the current quarter to about 2.4 billion in revenue and 79 cents adjusted EPS, ahead of the estimates here for 2.27 in revenue. So the growth should accelerate through fiscal 2027 as booking continues to grow at record pace. So it looks like the quarter showed some good execution, rising operating leverage, and the business increasingly driven by custom AI chips, and 74%, 3/4 of their sales coming from that AI data center.
All right. We got to 87. It's a little bit, let me bring it down here. We got to almost $88 in the after hours trading, where the market was a little bit soft, but they were not the greatest data report, but they come out with the report. We get nearly to $88. That's the good news, right? Now we're on a little bit of a fade. So when I see it kind of pop like that in the after hours, you love to see it go back there, right? I saw someone said, I got my options. I have a call spread on. Just get me to the open. Get me up to these levels, so I can peel out. Coming back, heads up, folks. Coming back down again here to the low of the session. Another 20 handle pop, faded. But what I would do if I was Marvell holder, held it through the report, I'd say, man, what's going to go on here at 83.50? We're currently trading at 83.25. I like to see confluence with the daily data. And back early in February, had 3 highs in the same area. We'll make it easy for you. We'll just call this 83.50. Major level, you're not that far away from it. If the bulls want to run, if they want to take this up to the pre-market high, very important to clear 83.50 off the hop. If you're looking for a gap fill, which Broadcom almost did yesterday.
That's the one I was going to bring up. I'm like, if that starts to fill, that's not a good sign, right? 2 good reports. We can say these weren't bad reports. They were good reports. So like we saw early in the tech trade when this started to turn, was good reports getting hit. Like Microsoft had a good report, but it's been hit ever since, right? So this is the trend that we need to pay attention to see if we start getting good earnings and good reactions. We got the reactions. Can now the reactions hold? Will be very key, right? Because that's what I was watching to see if maybe we saw a rotation to tech. We had 2 tech earnings, bigger earnings that could maybe lift some rotation, some investors' interest going back into the mega caps. I don't even know if I still have it. I had to put a look out there to maybe get out of Microsoft. Let's see. I'm pretty sure. No, I still got a little piece. I'm in there on a leverage one, MSFU, but 2807, and trying to hold on for dear life in the mags trade, right? I thought maybe we'd get a rotation to the mags, maybe we'd get a lift there, but we're not really seeing it.
down goes the pre-market low. There's absolutely nothing there at 65 and a quarter. They flushed it under 67.60. They're going back to their desks and they're getting more sell tickets here. Keeping an eye on that low from Monday. Still, well, I did say it was 60 handles away. Now we're
And what are
only
we seeing hit
50
hard?
handles.
You're pointing to it here. Some software, right? Already starting to lose. Like look at like an App Lovin back down to 491, and after hours this was up there to 514. Right. So at this point we start to lose that 3-day rally. Right. It was a 3-day rally. Right. Nice 3-day rally. I can't blame you guys if you guys took that software trade. It seemed like there was a little bit of a pocket of lull where everyone was focused on the Iran situation. So it gave that ability for software to lift. Now this job number doesn't make you think about Iran situation. It brings you back to the AI focus. It brings you back to that conversation, right? So I think today going to be a real interesting watch to see how far down can they take down software today.
Yeah, like you said, it was a little bit of source of strength yesterday. It was, I mean, but those stocks have just been so beat up, right?
Mm-hmm.
So you just don't know if it's just like seller exhaustion, like there's just no one left to sell. And then you get the people that are looking for multi-standard deviation moves that aren't holding this thing from triple digits and, getting to sell this on strength here. So still looking for bids here in the S&P, adding to our worries about the geopolitical situation, the job situation here is just another sticking another fork in this market today. Let's go to
Costco now. Yeah, let's go to that, right? And let's continue with the nowhere to hide theme, right? Let's go to Costco as they delivered another strong quarter last night, reinforcing why it remains one of the most powerful retail models in the market. The company reported revenues at 69.6, up about 9% year over year. Earnings per share at 458, beating the expectations of 455. While revenues came in above the forecast, comparable sales driven 7.4% higher. Driven by both higher traffic and bigger basket size, e-commerce surging more than 22%. I mean, everything kind of looks good here. Costco now has over 82 million paid memberships and growing 5% year over year. The membership fee income rose more than 13% this quarter, and renewal rates at 90%, generating high margin of reoccurring income that allows, of course, the company to keep prices low and drive loyalty. Yet the price just can't seem to hold here in this environment.
Street absolutely leaning the right way into this report. How this thing got over $1,000 a couple times, held up there. Big sellers came in. Now, just not a good day to report. Just not a good day to report. I mean, also you can mention it's expensive, but so's Walmart's expensive. You see the
I keep hearing that like relative talk, but you got to see how much money these companies make, right? Like I know that there's that forward outlook, but this is money that's consistent, right? I always hear that conversation when they bring it in with the Walmart or Costco, the fundamentalist out there, or people trying to say, well, these tech trades at like 40, 50, 60 should Walmart or Costco trade. But you don't have to worry about Costco's earnings going to the dump, right? Everyone's going to go to Costco this week. If I got to go to Costco, I'm not going to not go to Costco, right? But Dennis is also about it, right? I know so many people are about it that Walmart can't trade at this, but it makes the money and it's consistent, right? And their businesses are growing. And AI should help these companies further, not hurt them too. That's another thing. AI shouldn't really come in and destroy Costco. And if the robots are going to come and there's going to be no humans, well, they'll just have lower employees and they'll help their business even more, right? That's where I think the whole fight against the PE outlook shouldn't matter on a name like Costco or Walmart. But we can take a look at that.
Yeah.
And Dennis is saying he'd rather be in cash. Well, I can't blame you either. Walmart's been on a crazy drive too.
Yeah, and it's been a little bit hit after its earning got hit off earnings. It had the recovery, but just an unprecedented run in Walmart. Just real quick, just looking at the Costco here, you are now trading at 976, just trading near the pre-market low. You know what we talk about is there's like good days to report, there's bad days to report, right? Well, yesterday wasn't the greatest day to report, and this price action today is not. People are, they're just saying, looking at the overall market. Sometimes you can put too much emphasis on the overall market, but on days like this, you can't. A stock is a stock is a stock. We are continuing to get pounded here. Just looking up, still major red. The only thing showing green here is the oils. You don't know if they'll be like looking to take some profits in that, but the only string of green right here, once again, let me reiterate, is your oil stocks, ExxonMobil all the way down to Valero, the refiner, MPC up. Coke showing a little bit of strength here in the staples, but just a major, your financials are getting hit. Someone made the comment, the market will bounce today. Well, it always does have these rip your face rallies off. But one of these days, we're just going to go down and keep going down. We don't know today is the day. We are now only 30 handles from that low on Monday. Mitch, what are the analysts saying? Let's go.
All right.
Let's
All right. Should we go to the positive or the negative? Because I feel like this is nothing but a negative show, but let's just get it out of the way. Trade desk getting downgraded here. This is Wedbush and announcing a underperformance here in a price target of 23 for TTD. Of course, this is a stock that recently got the bounce with the partnership with OpenAI. What do you think about that? I mean,
oh boy. Well, there was it had that move yesterday, and it also like to do about 160 million or something like that worth of the stock. And then I think also Brent pointed out on the after hours show yesterday, the CEO is going to reveal today like something why he did that. So there is, would that make me run out and buy the stock? We talked about it on the closing print yesterday. No, market dynamics working against it today, down at 97 cents. I mean, this thing has just been tattered. If you want to look, I think the most important thing here for this issue is to hold yesterday's low, and it is not holding yesterday's low. Yesterday's low is 29 and a quarter. So look for that. If we can, in fact, get back above 29 and a quarter, I don't know if we'll get a chance to see the mark here at 29.79. If you're looking for support in this one, folks, I can't find anything because it gapped up yesterday. So the top of yesterday's range is 25.59 in TTD.
Let's go to the next one here. This is a chemical name, Dow, DOW, JP Morgan upgrading Dow to overweight and raising price target to 40. This has been the small pocket of strength in the material names. I'll give you two other ones to look at in this space that have been doing well, a BAK, and then you also got your Huntsman, HUN. This is a chemicals trade. BAK had earnings earlier this week that led the drive in the industry, and I'm sure it put it on the radar for JPM. And then them stepping up and saying, well, we like Dow here, DOW.
DOW trading up $1 after this run off the triple bottom here at in the lower 29-20 area. You are, first of all, folks, you want to keep an eye on 34.59. That was the high in yesterday's session. You are trading above that. The recent high of the move is 34.77. You haven't been up here in this area in a long time. I mean, yeah. You can look at it these two ways. That this is a nice upgrade after a nice move, and the stock's just going to continue higher. Or you can look at this as a gift from the trading gods here when the market is getting absolutely pummeled, down 90 handles, your stock's up a buck. I think you got to thank JP Morgan there for that overweight rating.
Sienna, CIEN, upgrading to buy here. Price target at 355 from B of A Securities. So we'll see what happens with this one. It's already taken a little bit of a hit. We'll see if it can bounce a little bit. What are you seeing here?
I wish they would have told me this yesterday. Right?
Yeah, one of those, right? One of those.
No, I mean, stock down 785 here. No, I wish they wouldn't have told me this yesterday because the stock got hit yesterday. I'm sorry, I stand corrected here. You're within yesterday's range here, so actually this thing is holding up okay. You did have the washout yesterday after the earnings. You're way off the previous day's low. I guess if I held this one, you're not going to see the 2-day close, but let's see if you can get back in the near the close. The close at 299.30. That's not too far away. Well off yesterday's low. Just chop another 10 handles off the S&P, Mitch, here. We are now at the 67.40 area.
Losing altitude on the daily levels too. If we can break Tuesday's low 669.66, that's not the ES, but kind of the outlook just on the S&P and the SPY here. If we start to break that, we're starting to really lose structure now, right?
Yeah, heading like I said, you have these moves up with air and quickly. I mean, we rallied off that low that you had on Monday. You rallied 170 handles. I can't believe that's when I came back to the mark. Was that what today's Friday? Yeah, I just came back yesterday. Holy mackerel. Folks, we're in trouble here. We got to find some bids. Let's keep it going. Let's keep going with the ratings parade.
Let's go to Okta, OKTA upgrade to overweight. Let me just see here. Let me pull up my Benzinga Pro. I had it just for a second. Pulled it down. Upgrade to outperform. It's a price target at 97, and it's a raise from BMO Capital.
Okay.
This one's an interesting one in the long run. I don't know if you know the story there, but it's an interesting one. It plays into the AI story with identity. Pretty much tries to identify if someone's on your software is an agentic AI or is it a human, right? So it could play out in the long run. Right now, getting a little bounce.
It is a nice bounce, and that just had one hell of a day yesterday. That was a big day. So after a big day like that, coming up from under $70, I like to see if you could get back green. Green would be a close. The close was 79.65. You're trading down 94 cents here from that level. It's just hard, after a stock has a run like it did, it's just hard to find support there. So I'll look at the close, and man, I'm sure a lot of people would like to see the mark on a lot of things here, and the mark in Okta coming in, as I said, the mark comes in at 79.65. All right, Mitch. Oh, UVXY had to say what a day to have Kenny on, Mitch. We threw you in. Yeah, excellent. Over 50. That's not good
overall,
here.
Right? You can do the VIX. I don't know.
So Mitch, we threw you into the cooker today. And then we took you off because I wanted to take my charts off here. Mitch, any closing thoughts on not the greatest day in the market so far?
So we got to watch the software trade, right? That's the one that put in some structure. I'll be watching to see what happens out that gate. If I want to see this market bounce, I'm going to be looking at that space. Another area that's been starting to slow down and turn with this week has been the semiconductor equipment stocks. Now you're talking your ASMLs, your AMAT, right? Your Micron trade, right? Look to see what happens there, right? Do we see further downside come into those names? Another big question that's to be had, what happens in the financial space? Asset management, credit services will be a big eye open right now. The XLF has a huge trend line that it can break here and go further down. Of course, we saw financials be a little bit of that struggle. I don't think they got as structurally set here of a bottom like software has. Software broke the low, then came back with rallying and good volumes. Credit services haven't done that, and asset management hasn't done that. So those are the two pockets of financial that I would be really concerned about kind of moving forward with this outlook. Another thing that came in, and we'll expand about this in STN, so you got to go to STN to hear about this, but of course, ChatGPT and Claude just released new financial tools that could also be weighing in to financial disruption also, right? So we saw the software names get disrupted, but we're also seeing financial space get disrupted with all this financial data that's coming to these large language models.
Yeah.
And it's not that you won't use, right, these advanced platforms, but if I can just hang out in ChatGPT and it be the place to hang out in, that's where a lot of people are starting to get more of the concern, right? Because now the time's being spent on these platforms versus like your CRMs, right? Your other platforms, your financial platforms like FactSet, right? Everyone used to go to that platform. Now will they just pull the data from ChatGPT and not even go on that platform, right? So you're seeing more companies partner with OpenAI because they're almost forced here to continue opening more partnerships. We'll see what happens with that trade. Keep your eyes open to see if tech can rally. Will it be energy that hangs on today? We will see what happens there.
Yep. Best things I can add, best advice is, very important that the pre-market low, wherever it is here, we still have 28 minutes before the opening to make sure that jot that level down. Going back to the low from Monday at 1850. That's your last bastion of support here on the market. Mitch, great job today. We're going to switch over to the Stock Trader Network, and we are going to attack what is going to be a volatile open on Wall Street, folks.
Let's get after it, traders.
On Monday with some better news.